all you need to understand the market in a nutshell. This is Deep Dive Finance by N3WS.
Welcome to the Deep Dive. Ready to jump into some market mayhem? We've got 4 big stories to unpack today.
Should be a fascinating deep dive.
All right, let's kick things off with, well, Tesla. Their Q3 earnings are out, and it feels like the whole financial world is waiting to see what Elon Musk is going to do next.
Yeah, there's a lot of anticipation around this one. Investors are really focused on a few key things. First, there are rumors about Tesla developing a cheaper EV.
A cheaper Tesla. That could be huge, right? I mean, if they can make an EV that's both affordable and high-performing.
He would be a game changer, yeah.
Yeah.
Not just for Tesla, but for the whole EV market. It could really accelerate the shift towards sustainable transportation.
Yeah, it's like imagine a Tesla in every driveway. Pretty wild.
It would definitely shake things up. And then there's the whole robotaxi thing.
Oh, yeah. Robotaxis. Is that the future, or is that just like science fiction?
Well, the interesting thing is Tesla's actually testing the robotaxi tech on real roads in certain places.
Wow, really?
Think about what that could mean. It could disrupt everything, ride sharing, public transport, even how we design cities.
It's kind of like a sci-fi movie coming to life. But, okay, let's talk about something a little more down to earth, like Tesla's profit margins.
Right. With all the new EV companies popping up, there's definitely pressure on their margins.
So can they stay profitable with all this competition?
Well, their Q3 report shows that their profit margins did dip a bit.
Oh, that's not good.
But they're investing heavily in new battery tech.
Oh, okay.
Which could reduce their production costs in the long run. If they can pull that off, it could give them a big advantage.
So it's a bit of a gamble, huh?
Definitely. But that's Tesla for you, always pushing the boundaries.
Okay, let's shift gears. Let's talk about housing and, well, things aren't looking so hot. Existing home sales in the U.S. just hit a 14-year low.
Yeah. If you're thinking about buying or selling a house, this is definitely something to pay attention to.
It's a big deal. So what's going on? Why are sales slumping so badly?
Well, a few things are happening. One is the high interest rates. Mortgages are more expensive now, which means...
It's harder to buy a house, right?
Exactly. It's putting home ownership out of reach for a lot of people.
And to make matters worse, the report also mentions affordability issues. Even if you can get a decent mortgage, houses are so expensive these days.
Yeah. High prices, rising interest rates. It's creating a perfect storm. And then there's the uncertainty around the election.
Oh, right, the election. Everyone's waiting to see what happens, I guess.
People tend to hesitate before making big financial decisions when things feel uncertain.
Yeah, that makes sense. So a slumping housing market, that can't be good for the economy as a whole, can it?
Not really. A slowdown in the housing market can have a ripple effect, impacting consumer confidence, construction activity.
Oh, wow.
It could even drag down overall economic growth.
So it's not just about people not being able to buy houses, it's a much bigger issue.
Exactly. Although one interesting thing is that while national sales are down, some urban markets are actually seeing a surge in demand.
Really?
Yeah. Millennials are looking for more affordable options, so they're moving to these specific cities. It's a shift that could reshape the housing landscape over the next few years.
Interesting. So maybe there's a silver lining in all of this.
Possibly. We'll have to wait and see how things play out.
Okay, let's move on to something that caught me by surprise. Apple and Goldman Sachs, 2 giants in their fields, just got hit with an $89 million fine. What happened there?
Yeah, it's a pretty big deal. The fine is related to the Apple Card. Apparently, they were misleading customers and mishandling credit card disputes.
Mishandling credit card disputes? What does that mean exactly?
Think about it. You're trying to dispute a charge on your Apple Card.
Okay, yeah.
Instead of a smooth process, you run into all these roadblocks and confusing procedures.
Sounds frustrating.
Yeah, and that's exactly what happened to a lot of people. It got the attention of the Consumer Financial Protection Bureau.
CFPB.
They investigated and ended up issuing the fine.
Okay, but Apple and Goldman Sachs, those are brands built on premium service. This seems like a major PR problem for them.
It is. Reputational damage is a big concern. The Apple Card was marketed as this seamless, user-friendly experience.
Right, exactly.
And now consumers are wondering if they can actually live up to that promise.
And in a world where consumer trust is so important, especially when it comes to finances, that could be a big problem for them.
It could have long-term implications, that's for sure.
Okay, we've talked about electric cars, we've talked about houses, we've talked about credit cards. Now let's talk about something we can all relate to, coffee, specifically Starbucks.
Oh, Starbucks.
They used to seem unstoppable, right? opening new stores everywhere, but they just suspended their 2025 guidance, which doesn't sound good.
No, it's definitely a sign that they're facing some serious challenges. They're citing a number of issues, and their preliminary Q4 results are pretty bleak. Declining sales in both the U.S. and China, that's a big hit.
2025 guidance. Can you just break that down for a second? What does that actually mean?
Sure. So basically it means Starbucks isn't confident that they'll reach the financial goals they set for themselves for 2025.
Oh, so they're basically saying, we don't know if we're going to make it.
Pretty much, yeah.
So what's going on? Is it just inflation, or is there something more to it?
Inflation is definitely playing a role. When prices go up, people cut back on their spending, and those daily lattes can become a luxury.
Yeah, I've definitely been making more coffee at home lately to save money. It's just not the same, though.
Right. And that's part of the problem for Starbucks. People are more cost conscious now, and they have a lot more options for their caffeine fix.
So it's not just about inflation, it's about all the competition out there.
Exactly. They're facing a lot of pressure from other chains, independent coffee shops.
So Starbucks has a fight on their hands. We'll have to wait and see if they can make a comeback.
And wow, it's been a wild ride through the world of business and economics.
Yeah, it's amazing how everything's connected, how these trends impact our everyday lives.
Exactly. We've talked about companies like Tesla and Starbucks adapting to these changes, but I'm curious, what does all this mean for us regular folks? How do these market trends actually affect us?
That's a great question. And what's interesting is how these big market shifts trickle down and shape our decisions, even the small ones. Take the housing market, for instance. High interest rates, making mortgages more expensive. But it's not just people who want to buy a house who are affected.
Oh yeah, good point. Renters are probably feeling it too. Exactly. Landlords might raise rents to cover their own costs. And for those who dream of owning a home, it just feels further and further away.
It used to be like you could get a starter home, Now it feels like you need to win the lottery just to get in the game.
It's definitely causing a lot of anxiety. But it's important to remember that the market goes up and down.
So there's still hope for us wannabe homeowners.
Oh yeah, absolutely. It might just take some patience, some planning, maybe be flexible about where you want to live or the kind of place you're looking for, or get creative with financing. Don't give up on the dream. Just, be ready to adapt.
Good advice. Sometimes we need to just shift our perspective. Speaking of adapting, remember the whole Apple and Goldman Sachs thing? The fine they got for that Apple Card really makes you think about how important it is to be aware as a consumer.
Yeah, it's a reminder to, read the fine print, ask questions, know your rights. Just because a company's big and famous doesn't mean they always have your best interests in mind.
It's easy to just trust those big brands, but this shows that even they can make mistakes.
And it highlights the importance of having, regulations, agencies like the CFPB to keep those companies in check.
Okay, we've covered housing, credit cards, can't forget about Starbucks. What's the final verdict? Is it game over for the coffee giant?
I wouldn't count them out just yet.
Yeah.
They've definitely got some tough challenges ahead, both inside the company and out. But I think they can make a comeback.
How do they do that? What would a Starbucks comeback even look like?
They need to make some big changes, for sure. Fixing those internal problems is crucial, Treat their employees better, manage their costs. Happy baristas make happy coffee, right?
For sure. And what about the customers? What do they need to do to win people back?
Innovate. Come up with some exciting new drinks, more options for people to personalize their orders, maybe use technology to create a more, individual experience. You got to remind people why they love Starbucks in the first place, but also appeal to, the next generation of coffee drinkers.
That's a tough balance to strike. Well, that wraps up our deep dive into the business and economic landscape. We've seen the highs, the lows, and everything in between. Hopefully, you've learned a thing or two about the forces that shape our world.
And remember, it doesn't stop here. Keep learning, keep asking questions, and don't be afraid to challenge what you think you know.
Exactly. Stay engaged, stay informed, and be ready to adapt. Because in business, just like in life, the only thing that's constant is change. Thanks for joining us on the Deep Dive. Until next time, stay curious.
And keep exploring.